And a bright spot in the retail space that comes from Urban Outfitters. Yes, another Holy company. Holy jeans is what they sell too. After the company saw sales rise 7.5% year over year, driven by a strong showing in-store and online here. Slightly biased. This is a Philadelphia-based company. I love Philadelphia. Urban Outfitters shares, they're up by about 2% as investors might be loving some of the results here. But I think for what they've put out and the consumer that is a little bit of an overlapping consumer between what Urban Outfitters is going after and what Abercrombie and Fitch is going after in their consumer, I think there is kind of a solid Venn diagram that investors might be able to kind of draw between some of the results here.
Yeah, young people are buying this stuff and they see this stuff as on trend. Just one thing to point out here, Urban Outfitters itself, the namesake brand, was the weak link during the quarter. Its net sales were down by 13%. Anthropologie was up 11%, Free People up 22%, and then there's some smaller brands that they own as well. But Urban itself, and the company said Urban itself is going to continue to lag a little bit, I believe, unless I'm confounding it with Abercrombie, which I might be. But in any case, that Hollister was going to continue to lag a little bit. Anyway, the point is, yes, the other brands are doing quite well.
It's interesting on the Anthropologie side, though. The very high-end, the luxury part and brand within Urban Outfitters.
Yeah.
So, and what you're seeing there, and as we were having a full-on conversation about what the state of the consumer looks like and the bifurcation that's starting to be shown as well, as commented on from BlackRock's Rick Reeder a moment ago here, that bifurcation also continues to lean towards, or at least showcase, that the high-end consumer still has a propensity to spend and can deploy more cash than leaning towards credit than some of the lower income consumers, and perhaps that bifurcation showing up in Urban Outfitters results as well.
Yeah, so let's get another piece of the puzzle and talk about personal care as well, because we got to talk about Bath & Body Works and not doing as well as some of those others. It saw in-store and direct-to-consumer sales slipping during the second quarter. And if you look at how those shares are performing versus the others, the company basically had a second quarter earnings beat and an earnings forecast boost. So that's sort of what investors are weighing today. The shares are down by 1.8% here. And sales year over year fell by 3.6%. So we have seen strong sales of makeup and other kind of personal care, but this one not participating to the same degree.
Yeah, how do you miss out on the self-care trend and the little luxuries trend if you're Bath & Body Works? I want my apartment to smell better. I usually lean towards some candles. My candles that I might be getting are at a different capacity, though, I would guess, and many other people perhaps think the same. However, for all of the different products where you've seen, even as we were talking about Kohl's, leaning further into that partnership with Sephora, it's an environment where self-care products, whether it's scented candles or whether it's some of the hand lotions that you're getting, consumers gravitating towards that. And for Bath & Body Works, I don't know if there's kind of just a product mix misstep, if you would. But we'll see what more the company has to say within the earnings call as well.